Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 29.66% year to date. We have a green for the stock market strength color signal, and we are beating the returns of the S&P 500 buy and hold investor. Their returns are currently 23.24% year to date, and there we go. Let's rock on. Today's video, we are going to cover, this video is for retail investors as we do a deep dive into technical analysis, or TA, for the S&P 500. We not only do the technical analysis, but we show you exactly how we trade our model portfolio. I am not sure if there is another YouTuber that does this. You in the audience that's watching this, if there's another YouTuber that puts out their model portfolio the way that I put it out there and puts out how they trade their portfolio, I would love for you to drop me a link in the description so I could review that person's channel, because I don't think anybody else does this. Okay. We are also going to review last week's trades. We're going to see how the model portfolio is doing compared against the benchmark of the S&P 500. Because everyone's got trades here and there, and they can be successful trades or not successful trades. But depending upon how you trade that trade and how much of the portfolio is at risk and things of this nature will determine how that person's trading style is over the course of 12 months, or what I'm trying to say is on a consistent basis. What we're trying to do here is not have one trade or two good trades or three good trades. What we're trying to do here is we're trying to invest our investment capital over the long term and do it beating the returns of the S&P 500 buy and hold investor. That's the whole goal of Spy Trader Now. We're going to look at seasonality, and then we're going to give you a market summation and closing thoughts and what our next trades may be in our pipeline. With that, let's go on with the show. Okay, this is a weekly 5-year candlestick chart for the S&P 500. Last week, the S&P 500 lost 2.08%. Now, this is called the thumbnail here, and there's the main chart for what it is that we're looking at. And we look at SPY, which is the ETF for the S&P 500, referred to as spiders. And here in the thumbnail, what you can see is the last candlestick. That's this candlestick right here. And on that candlestick, what's happening is, hang on, let me get you some more. What's happening is the week before, that nice green full-bodied candlestick, this one right there is the bottom of it, that just had an explosive week the prior week. We gave back about 50%. If you look at 2 weeks ago's action and you compare the candlestick of the previous week, you can see we just gave back about 50%. In addition to that, notice these highs that were made here and here. Well, if you just draw a straight line across, we held support somewhere right in that area. That is absolutely normal pullback activity for a bull market to have this explosive week and give back 50%. So far, you are seeing absolutely no red flags on this chart. What else is this chart trying to tell you? We still have the negative divergence on the MACD. You see that you've made lower highs here on the MACD, and on the price action, you've made higher highs. This negative divergence, what we need for it to clear out is we need this black line to go above this blue line right here, which is just taking a trend line and drawing it off of the tops of these highs and then bringing that down. So until that happens, until this black line goes above and crosses above that line, this negative divergence is still going to be an active thing to watch and monitor. Now, to make matters worse, not only did it not cross above this trend line here, resistance trend line, but it has also made a top and is now curling back down, getting ready to travel below its signal line, which is the red line. That's not good, because if this is going to continue to drop down on the MACD, more than likely the actual price chart is going to also drop down like this. Now, if that happens, you can see that we are going to now cross below this line right here, taken from the low of taken on this cycle low here and on that low right there. So then we're starting to break support trend lines as well. So all this type of activity is bearish. In addition to that, the slow stochastics is still above 80, but it is below its signal line, and judging by the look of it, it sure looks like it's heading south. Bearish activity. So what I am observing here in this chart is somewhat of it's still bullish. The chart is still showing me bullish, but it's showing me signs that it is right at a precipice of turning bearish and going quickly down. So I want to be prepared in my portfolio in an effort to make sure that I don't get completely taken advantage of with that, if that were to happen. So as you see in this presentation, I'll show you how I'm positioned and what I'm planning on in the future. Okay, last week we did make one trade. We're calling this one trade because it was all done at the same time on the same notification that I sent out to my subscribers. Now, this notification was sent out on Monday, 11/11 at 12:37 p.m. Pacific Standard Time. So there was about 23 minutes left before the market closed on Monday when I sent this out. But trading didn't really do anything on Tuesday morning. So even if my subscribers had missed this particular trade late Monday, they could have still made it early Tuesday morning when the market opened. So what I decided to do was let's close out our long calls. And these were the long calls that we had on, and we closed them out for a great profit. All right, so here are all the trades we've made in calendar year 2024. Start the year off with $100,000, and then we've built that portfolio up to $129,000 and change. Now, recently, the calls that I just closed out were these two calls right here. And we did have excellent profit in those particular trades. So on the first call that we had, I did make a profit. Hang on, let me clean this up just a little bit. We did make a nice healthy profit of 61% or $1,200. Now the second one, because I pyramided into the position, I did pick up a couple of extra calls. That was on 11/7/24, held to 11/11, so only in the trade for 4 days. But we did make a nice healthy 9.95%, $510 on that trade. We currently still hold 200 shares of SPY that we've been holding now for 40 days. We are profitable by $2,860 or 2.5%. We still hold those 200 shares naked at this time. All right, here is our model portfolio in blue compared to the benchmark, the S&P 500 buy and hold investor in pink. And you can see how well the portfolios have done for the whole calendar year 2024. I do want you to notice that on the model portfolio in blue, how slow and steady this equity curve is, just constantly rising up. Do have a little bit of a pullback here due to the recent market action of last week, but everything is pulled back, including the S&P 500 buy and hold investor. All right, now we are looking at a daily candlestick chart for the S&P 500 with a duration of 6 months. So you can see the candles very, very well in this small 6-month time frame. We got a few things going on here. First thing I want to point out is that we do have cycle brackets down here at the bottom. And we are depicting that this cycle low represents that one, this cycle low is that cycle low, this cycle low is right there, and this one is right there. So you can see pretty much these line up very nice. And in addition to that, we also took and did a Fibonacci retracement taken from this cycle low here to this cycle high so far, our current cycle right there. And we are measuring the pullback. We just penetrated and danced around the 50% retracement, which is a normal, healthy pullback, nothing so far to be alarmed at. If there was anything to be alarmed at, I would say is that we did have a tremendous run up in a short period of time, and definitely we're giving some of that back, which is normal market healthy action, but it's happening early in the cycle. So from here to right there, and so far in the cycle, we are somewhere in here, or even actually a little bit shallower. So this is all on the left-hand side of this cycle bracket. So the timing is early in the cycle. Okay, so we want to see what is going to happen now with this market. Are we going to bounce off the 50% and start to head north again? Are we going to travel sideways like this? Or are we going to continue to travel down? And if so, how much further down are we going to go? Generally, that's all the market can do. It can go up, down, or sideways. So the expectation is it will do one of these three things, up, down, or sideways next week. Question is, what's the prevailing evidence tell us? Okay, what is the market trying to tell us? Because when we look at technical analysis, which is what I am, I'm a chartician, where I want to look at the charts as a technician, and I want to determine what is the information that this chart is deriving to tell me. Okay, first of all, we're still absolutely in a bullish pattern. We did break a trend line. This valid trend line right there that I've got my arrow pointed towards, grabbing this low, and really, well, this one was on the way down there, but grabbing these two, drawing that straight up, we broke it, then we went up above it, and then we came down below it. So we're currently traveling below at least that trend line right there. So that's one kind of negative aspect. Now, I do have some exponential moving averages here, the 813 and the 21. We are currently traveling, well, right there at the support of the 21-day exponential moving average, where he closed right on the bottom of that support line. But if you'll notice here, especially here in the thumbnail, how all of those exponential moving averages are now pointed south. So that looks like there's more energy to go to travel down. And then the question becomes, okay, how much, if that's true, how much further down are we going to go? Now, I've got another trend line that I drew in. It's a little hard to see. You can see it right there, this pink line right there, grabbing that low and that low. And that's taken from this cycle low all the way over to this cycle low right here. So it's a reasonably good trend line that should have some validity. So that's the closest trend line. We may come down, tag that trend line, and then bounce, or we may come down to the bottom of this cycle low right there, which I've drawn in with this pink line right there. That'll be the next support level. Bounce off of that, and then start to travel north. Now, let's talk about all these different scenarios. If indeed we bounce off of this trend line and then travel north, that would be bullish activity, because then this cycle that we're currently in, representing this cycle bracket right here, would still be positively configured. In other words, we did not take out that cycle low established right there. And as long as we do that, the current cycle that we're in will stay positively configured, bullish activity. Now, one thing I want to point out is that on this cycle bracket right here, we actually had a neutral cycle. We went up, went a little sideways, and then went down. And this cycle low and this cycle low were the same, meaning that this particular cycle was a neutral cycle. So with that said, with a neutral cycle right there, that reduces the probability of the next cycle, this current cycle that we're in, of being a greatly positive cycle. But it was a tremendous cycle because of the election. So we did have outside influences on the market, which dictated the returns that the market produced. And the market absolutely was positive. We went up greatly in the current cycle. And we went up greatly in a very short period of time. Hence the reason why I did the trading the way that I did, because I felt like we went up too fast, too soon. Let's take some chips off the table. That's why I got rid of my calls. I still have the 200 shares. I still got skin in the game, but without the leverage. The leverage I'm referring to is the options, the long call options that I had. Let's take that leverage off the table. We made great bankroll. I showed you that, how much we made. We did fine, and we don't want to be too greedy. We want to take those chips off the table, which we did, and we banked that profit. Now we're trying to determine our next steps. Another thing I want to point out here, the MACD is getting ready to cross below its signal line. That's going to head south. The slow stochastics already below its signal line and also below 80. And doesn't that look like it's heading south? All these indications tell me that this market is going to continue to head south. The only question is, the only unknown variable is, how much further south is this market going to go before it finds a footing and starts traveling north? This is the month of November. November is a bullish month. Let's jump and get towards the seasonality chart. Let me show you what's going on over there. Okay, before we get to seasonality, let's take a look at this ratio chart. NASDAQ 100 compared to the S&P 500. That is the chart that is in red and black. And we also have the S&P 500 in dark blue, which is right there. And we have the black chart, which is the NASDAQ 100 right there. Okay, what's happening here? Well, our ratio chart was in this trading channel with the upper end here and the lower end here. And then just with last week's action, bam, we went right below it, just straight down, slicing straight down. That's telling you that the NASDAQ 100, which is the chart that's in black, is more bearish and has traveled further south than the S&P 500. That is not good. That is bearish activity. So because when the NASDAQ 100 technically should be more stronger than the S&P 500. It's good for the NASDAQ 100 and it's good for the S&P 500. So with the with the ratio chart heading south, then that is not good for both markets, the NASDAQ 100 as well as the S&P 500. So with that said, that's bearish activity. In addition to that, what do we got? On the MACD, we are already below its signal line. You can see it here in the thumbnail. But I've got in here a support line, and boy, doesn't it look like it is getting ready to cross below that. Slow stochastics already below its signal line, and it is traveling down, and it looks like it's pointing towards the 20 and traveling towards the 20. All of these things tell me that next week's action is not going to be good for the S&P 500 as well as the NASDAQ 100. Okay, now we're looking at the VIX, which is the volatility or fear index. 3 ranges. Below this green line, bullish. Below this green line here, the ultra low range, also bullish. We spent a lot of time there in the not too distant past. Above this green line here, that's the upper range, which is bearish. Where do we currently stand? We currently stand right at this line right here, which is right there. You can see it here in the thumbnail, 16.14. And at 16.14, we are dancing between the low range and the ultra low range. Both ranges are bullish, but look at your cycle brackets here at the bottom. You're right at a cycle low that coincided with that cycle low. You have upward energy now coming into the cycle this way. Well, that upward energy sure looks like it's pushing up to at least this upper green line, which is at the 20 range. The S&P 500, if if that prediction in theory is correct, the S&P 500, which is in dark blue right here, is going to be traveling south. Next week, oh, and look at the slow stochastics. Slow stochastics below 20, above its signal line, and ready to travel north. MACD, which is below its signal line, bouncing off of, well, I just drew that in right now, but you can see that we've bottomed and we are getting ready to travel north. You can really see the bottoming on that MACD right there. This upward energy that is going to happen with the VIX, well, the S&P 500 works inversely to the VIX. As fear goes up, the S&P 500 travels down. So with that said, this chart is telling me bearish activity for next week. All right, now we are jumping into seasonality. We are currently in the month of November 2024. Going back, look back for 5 years, 80% probability that you are going to close the month higher than when you opened the month. Where is the current month of November? We are currently up 3.01%. There is your candlestick of the current month. So we can technically drop 3.00% and still be positive for the month of November, and still this 80% probability will still come into play and still have worked into a truism, because we're going to be positive. We'll be positive by 0.01% for the month. So we have 3% of leeway there to play around with and still have seasonality be in our favor. So with that said, the market can go technically in either direction with the possibility of a 3% pullback. Okay, now we are looking at a 3-year weekly candlestick chart for the S&P 500 with standard deviations +2, -2 in gold, +1, -1 in pink, and the halfway regression line in the dashed green. Now, what is happening here? Well, I got in some projections that I drew in earlier, and with these projections, I do show that we are dancing between the upper projection and the lower projection currently. And we did give up that 50% like we talked about earlier. I think that this is telling me that we are still going to be traveling further south. Now, I want to switch over right now. I want to switch over to the 1-year daily. Let's do that. Let's go over to a 1-year daily, change our cycle brackets to daily. And I want to blow this up and bring this down so that you can see everything really well here. And let's talk about this. I've got in here an upper end target, which I do still believe, currently from what I'm seeing on the charts, we're going to hit this before the end of this calendar year, 615.95. Now, on this lower target, which was taken from this cycle low right there, based off of this cycle right there, 568.7. Now, if indeed we do hit 568.7, that is going to take our current cycle and make it a neutral cycle, just like the previous cycle that we were in. The previous cycle was also a neutral cycle. If we come back down to these lows, that's going to be also a neutral cycle. I think that's going to be a buying opportunity if that buying opportunity presents itself. Somewhere between where we're currently at and here is the buying opportunity. We just don't know exactly where that's going to be. Let's say that I'm completely wrong, and this market goes from its current level down to something below 568.70. Then the next question becomes, how low will it go? Well, the cycle taken from this cycle low to this cycle low right there is going to be the next level of support that I'm showing, which is this red line right here, if indeed we do hit that. I don't think we're going to come down to that level, which is going to be at about 540. I don't think that that opportunity is going to present itself. I firmly believe it's going to be somewhere between where we're currently at and 568.78. If indeed that does happen, we'll have to do something to protect the portfolio. but I think that we're going to find some support. I think that this market still has strength, and I want to be ready for that activity either way. But my expectation is we're going to find support and then come up. All right, now we are looking at a spreadsheet that I created to determine the strength of various asset classes as well as the 11 sectors of the S&P 500. We want to compare last week's reading 57 to this week's reading 48 for various asset classes. So we know that we are losing strength across various asset classes. Here we break down the 11 sectors of the S&P 500 individually, and we check out last week's reading of 68 to this week's reading of 62. Healthier than these asset classes here, but still losing steam. And I think that we are going to continue to lose steam. Now, an interesting thing here is that we're currently in green, but we're at 62%. Well, once this gets to 60% or lower, this is going to change from a green to a yellow. That may happen next week. So let's keep an eye on this. Now we are looking at the all-important chart, TNX, 10-year U.S. Treasury yields. That's the candlestick chart right here. We also have the S&P 500 in dark blue, which is right there. And we have TLT 20-year bonds, which is in black right there. As the U.S. 10-year yields travel north, the bonds travel 100% south. It is unbelievable what we are observing here in the 10-year yields. Man, we are just going straight up. I'm expecting pullback down. The Fed's talking about cutting rates, things of this nature. They've made a 50 basis point and a 25 basis point rate cut. Now they're thinking about skipping a rate cut because inflation and things are looking a little sticky. So, but this 10-year yield is concerning because this money fights against money that can be invested in the S&P 500. If you've got nice, fat, attractive yields in money markets and CDs and things of this nature, well, a lot of investors are not going to want to put their money at risk in the S&P 500, especially at these valuations, if we're going to have really strong 10-year U.S. Treasury yields. So we want to keep an eye on this. We want to see what happens. This ultimately, also high rates is going to affect mortgages. It's going to ultimately slow down the economy. So we want to see how this all plays out. Okay, now we are coming to closing thoughts with the market summation. Well, as of November 16th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now. Obviously, the market is pulling back, and we are closely measuring that pullback to determine the market strength for the next signal. I showed you in this video exactly how I'm doing that, so that you can do this on your own as well. I'm showing you how I'm making that determination, and you can do that as well. Because we are in a strong seasonality month of November, and we are only up 3% for the month, my plan is to take on an in-the-money covered call with a very short duration, 1 week, and evaluate so the call would be put on Monday and with an expiration date of Friday. So technically it would be a 4-day trade looking at it from that perspective. And then we can see how the week prevails and how things happen, because we're getting towards Thanksgiving. And as the closer we get towards the holiday of Thanksgiving, the market is going to like that. It's going to be bullish for that time frame. Here is the exact trade that I plan on doing. It's going to be with 2 contracts. So we currently have 200 shares of SPY. This will protect all 200 shares with a 3% downside protection. And when this trade goes on if it's anywhere close to the current price, we are going to get a credit in our account of $3,660. So this is the plan of action. But even though I say all these things, the market, as we all know, is an 800-pound gorilla. And this 800-pound gorilla is going to do whatever it wants to do whenever it wants to do it. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, ring that bell to be notified when I post a new video. Thank you and wish you good trading.